Given the uncertainty, do you go and bet on those sectors that have sold off in anticipation, or do you stay away from those assets, given, of course, a risk-off sentiment that might continue for a while? And the reason I ask is because we saw that huge outflow from Asian markets in the past month.
Yeah, so Asia does have its own different dynamic going on as well. But just in terms of the US, if you look at these three scenarios, right, higher for low, a soft landing, basically you want to own growth stocks, duration stocks, right? In a higher for longer scenario, you want to own value stocks right now. And in a deep recession, obviously, you want to own defensive stocks. So depending on which way the probabilities are moving, and right now they're moving towards the value favorable camp, and perhaps a little bit towards defensives. So that's the areas that I'll be looking at in the U.S. Coming to Asia, I think the bigger picture here is that what's happening with China is much more important in Asia, and also what's happening with the tech cycle, which is important to Korea and Taiwan. And so if you get both of those two right, you still have a chance of overriding what's happening in the U.S. And particularly in the tech cycle, we've seen that bottom out quite, I would say convincingly in January. And we are seeing that recovery continue into February. And looks like with all this excitement about ChatGPT, it could at least continue for a while. And then you think about China. What's happening in China is that it's a very different market from the US. The US is very much an inflation-driven market, and everything that's happening is based on what's happening to inflation. In China, it's about growth. And so if you do get growth improving, like we saw with the PMIs yesterday, that is pretty positive for the market. And if we are going into the NPC, we don't expect very positive outcomes on the growth side, but you could see better communication in terms of reforms, in terms of regulations, and that could also help drive earnings upside in China.
I still want to ask you more about China, but I only have time for one more question, and I had to pick. I'm going to go and pick the tech cycle, because why do we continue to see semiconductor inventory rising in South Korea, and what will that mean for that sector in South Korea and Taiwan as well?
Right. So when we think about the tech cycle bottom, or the tech cycle in itself, there are obviously multiple variables that go into that, and a couple of them, inventories is one of them. When we look at orders quite closely as well, and orders are starting to jump. If you look at export orders in Taiwan, which came out yesterday again in the PMI numbers, that was very, very strong and a very big jump compared to what was previously the trend of declining new export orders numbers. So that's one. A second is that if you look at the earnings downgrades for the semi camp and the tech camp overall, we've already seen a magnitude of downgrade that is typical of a down cycle. So again, it matches the fact that we've already seen a significant down cycle there. Then if you look at valuations, again, on a price to book basis, many of these companies are trading at bottom cycle valuations. So yes, there is some variability in the inventory side. And again, I would say that it's not straightforward to calculate inventories. And if you look at different markets, different companies, there's a different picture there. But if you look at orders, if you look at earnings cuts, if you look at valuations, bottom is a much more likely scenario.